S&P equal weight index down 0.5%, but NVIDIA didn't rise today. It was the other sort of big cap, mega cap tech companies. Amazon, for example, as we talked about earlier, at a new record and above $2 trillion in market cap. For more on what's going on in the markets, not just today, but to broaden it out a little bit, we're bringing in Mark Newton, Managing Director and Global Head of Technical Strategy at Fundstrat Global Advisors. Thanks for being here.
Julie. Great to be here.
I want to get to some charts that you are watching to kind of help us direct us as to where we're going. So here's the S&P 500 going back to the beginning of the year, actually going back several years. And you've talk us through what you're seeing from a technical standpoint.
So it is important to know the S&P continues to be dominated by so many large cap tech stocks. So the broader market has not been doing as well as the S&P, but yet we're up 14.5% year to date. And so, a very nice uptrend. Tough to find any issue with that, except if you don't own any technology, then you've obviously performed much worse. A lot of reasons to be constructive about the market. We're heading into a very bullish time of seasonality in election years. July tends to be very, very good, similar to June. I think a lot of investors remain worried about geopolitical risk, about political risk, and the fear of growth slowdowns. But the bottom line is, technically, we have over 70% of all Russell 3000 stocks above their 200-day moving averages. That's actually a much healthier sign. So, yes, despite the minor breadth erosion we've seen in recent months, markets technically are still on very sound footing. And, typically during election years, they do tend to rise through about August, September before peaking and then selling off into the election. So I have no reason to say, without any evidence of trend deterioration, that can't continue. I'm actually still quite constructive. I think S&P gets up towards 5650 or so. First part of July tends to be very, very bullish. It's normally one of the best parts of election year, first couple weeks in July. So I think it's worth considering that May PCE might dip. That would cause a plunge in rates and the dollar, and actually stocks would rebound, and we'd see more of a broad-based rally, which we haven't seen in some time, and investors are anxiously looking for.
Very interesting. I want to dig into the breadth question a little more, because this has been so much a topic of debate lately. So this is a chart brought to us by Bloomberg, where they looked at the S&P 500 in blue. Then it's the percentage of stocks in the S&P above the 200-day moving average. That's in purple. And they've highlighted these areas where we've seen big gaps. Right now is one of those areas. So the S&P continues to rise, but it just shows the momentum is not there for many of the stocks within it. How much does that matter?
Well, it matters just that investors understand that it's happening, and it doesn't have to mean that the market is going to go into a correction or roll over. Those tech stocks can continue to go up, and the divergence can get wider and wider, similar to what we saw back in 2021. However, we can also see what I think is going to happen is as a start of the broader market to play catch-up. And we've seen a little bit of that in financials over the last week. We've seen it in healthcare with sectors like biotech breaking out. We've seen it in industrials. The Dow Jones Transports actually broke out of a very well-defined downtrend today. That gives me a little bit of optimism that investors are skittish. We don't quite see the ebullience and the complacency, but at the same time, the broader market is slowly but surely starting to show evidence that it's ready to start moving higher, which I do think happens in July.
So let's look at the S&P equal weight. This is the Invesco ETF that tracks that. And so are there also technical indications here that give you optimism that we're going to see a little bit of a breakout?
Well, not yet, no. Okay. The answer is, of course, no. But I mean, look, this is a well-defined triangle pattern for those that look at technical analysis. Anytime you see a huge run-up that then turns into a triangle, 9 times out of 10, you do get a continuation move, meaning we break to the upside. I happen to think that because I feel that rates are going to start to plummet along with the dollar, which is very counter trend right now in terms of a narrative. But I do sense that the data is going to continue to get weaker along the fringes. Inflation should start to fall like a rock. So despite the fact that gas and food prices are high for everybody, you have been seeing some evidence of broad-based inflation starting to come down. And I think that's going to be encouraging, not because a weak economy means stocks are good, more that the Fed's rate cut view will come back into line, and we'll have a little bit more clarity as to when they start cutting rates. But make no mistake, since March, look, it's been a tougher market if you don't own tech. The market's literally been sideways, very different than last October through March. So yes, we do need to see that evidence of broad-based movement. I think that happens in the next few weeks. I honestly am pretty optimistic we're going to see it turn back up.
We got to get in one more quick one, and then we got to send it to Micron here because we've got some earnings coming out. NVIDIA, because this is the chart that a lot of people are looking at here about whether we're going to continue to see upside for this one.
Look, it's technically and fundamentally very dominant right now. 3 days it lost $300 billion in market cap, but you notice the S&P only lost about 1%. So it didn't really have the kind of extent of damage to the broader indices that many people thought might happen, because it is over 5% of the S&P.
Yeah.
I like NVIDIA. I own NVIDIA. I sent out a note to clients saying 115, 116 is really rock hard. You know, short-term support, if it gets under there, there's a long-term uptrend over the years. It hits right near 105. I think this company is going to continue to outperform. The Blackwell chips are going to be a big deal. Customers are still double and triple ordering. Technically, sure, it's overbought, but that doesn't mean you sell, and that's an important reason. We haven't seen any evidence of trend deterioration, and now we know that NVIDIA is being bought by XLK and other ETFs, and you know, it's tough for me to avoid it. You know, for many of you that know our product, Tom Lee, it's a super granny shot as part of his list.
Yeah.
And there's a lot of reasons to still embrace it. I think it goes from 118, where it is now, up to likely near 140 into the middle part of July, which would be a big move in a short period of time. So I like it.
Mark, really great to get your perspective on all of this, as always. Really appreciate it. Thank you.